advisors. My point is, you need to be in control of your own money. So the wealthy people out there, they don't outsource control of their money. The wealthy people have financial advisors. They talk with their financial advisors. By the way, they have the financial advisors that also have opportunities outside of stocks, bonds, and mutual funds. Hello, and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer, and I hope you're doing well. Say, I want to talk about, really it's going to be, forgive me if you're a financial advisor, because it's probably going to sound like I'm trying to bash financial advisors, but I'm really not. I am bashing some of them, quite frankly. And if you fall into this category, maybe think about what I'm saying. But so just a preface, there's some amazing financial advisors out there, and I think they do a great job, and I think they serve their purpose and go above and beyond. And I know many of them, and some of them invest in my deals, in fact, and they do really well for their clients. But there's others that I would say do a disservice to the industry. And in my opinion, they are making a bad name for themselves and for the industry. And I think this is just by my thought, based on kind of maybe a little bit of the trends that are happening. But I think if you're a financial advisor and you're not advising your clients properly, you're going to start to get called out more and more. And here's what I mean. Okay. So a lot of the financial advisor community does not talk to their clients about alternative investments. And alternative investments means any investment that is outside of stocks, bonds, and mutual funds, right? So your typical, publicly traded opportunity that you could easily find, that anybody can find. And financial advisors are good at doing that. Some of them are good at doing that. Quite frankly, it's like anything. Like, just because you're a financial advisor doesn't mean you know what you're talking about, doesn't mean you're financially astute, doesn't mean that you're qualified. So if you're out there looking for a financial advisor, make sure you're finding the best, most qualified person. But so that's what most of them do, is they're just going to get you into the normal stuff, that stuff that everybody, the garden variety stuff that everybody does. And quite frankly, that's probably the right answer for a lot of the people out there, right? Especially if you're younger, you just don't have a lot of money. Maybe if you're really old and you're looking to retire soon, like, quite frankly, that is a good option for a lot of people. So I don't want to say that's the worst option. And I do want to say, like, I have a financial advisor. Again, I respect financial advisors. I think they are very, very helpful, but I think you have to find the right one. If you want to create real wealth, you have to find financial advisors that can actually advise you on investment opportunities that are good for you, and actually look at the investment opportunities that you bring to the table and help you determine if they are a good fit, or at least help you ask some different questions, think about it a different way. And that's where this episode's going to go. And so to those of you who are financial advisors and you're listening to this and you're doing that, thank you, by the way. Like, that's awesome. Congratulations, and keep up the good work. And by the way, spread the word to other financial advisors. So early on, when I started raising capital, I realized that financial advisors are a lot of times they're not good for me. Right. And the reason why is because when I've got an investor and they want to talk to their financial advisor and get their advice from their financial advisor, and that's what they decide is whatever the financial advisor says is the way we're going to go. Well, if it's the wrong financial advisor, which it's like 80% of them probably, or maybe even higher than that, are going to say, don't invest in that. Just don't. They don't understand it. They don't know anything about it. They've never even heard about it in most cases. But I remember one of my investors right now. He went to his financial advisor, and his financial advisor told him, "No, don't do it. It's too risky. Just don't invest in this deal." And that's what he told me. He's like, "I can't invest because my financial advisor said I can't invest." And this has happened to me multiple times. Like, and I know the second somebody goes, I'm going to go to my financial advisor to ask, and I ask them a little bit about their financial advisor. If they're telling me they're with, a big firm and whatever, I know pretty much right on the spot that it's likely the kiss of death. Like they're not going to invest with us. And so it's probably not worth spending a lot more time talking with them because they're not going to invest with us. Because if they're just going to trust exactly what their financial advisor says and their financial advisor has no clue about alternative investments, the answer is no. The answer is no. And it's, again, a lot of them don't want to learn how to do it. Here's my point, not to belabor and to insult financial advisors. My point is you need to be in control of your own money. So the wealthy people out there, they don't outsource control of their money. The wealthy people have financial advisors. They talk with their financial advisors. By the way, they have the financial advisors that also have opportunities outside of stocks, bonds, and mutual funds. These financial advisors know of alternative investment opportunities. They hear about them. They're well educated about them. And they're going to talk to you about them. And when you bring them an opportunity to invest in, and you say, "Hey, can you look at this?" They're going to actually know what they're talking about when they say, "Oh, by the way, this is what I think about this," and you got to be cautious. They're going to actually have that type of advice, and it's going to be well thought out, good advice. So those are the people you're looking for. But the wealthy, they don't outsource the control of money. Financial advisors they're incentivized based on, based commissions and what they earn. And that's the amount of money you're investing with them. So if you're not investing with them, that money goes somewhere else. They're not going to make as much money. So they're really, you got to think about that. They're incentivized to optimize and grow your wealth within their control, not to grow wealth outside of their control. Now, again, some financial advisors have access um, to be able to make money on other alternative investments and to advise properly. So you got to understand what their fee structure looks like, and how do you win? How do they win when you win? Right. Um, I think for me the biggest thing is when I look at, how do the wealthy people keep and grow their wealth. They actually keep it in the stock market at a much lower rate than your typical person. So a typical person has most of their wealth in their 401k, IRA. They've got some it's certainly in their house, but if you take away their house, it's mostly 401ks. And that is comprised of, the 60/40 rule, stocks and bonds. And so, most of people are somewhere around 60% stocks, 40% bonds, somewhere around there. And when you look at what the wealthiest have, man, it they're like 20% in the stock market, a little bit in bonds. The rest of it's going to be in businesses, in real estate, and oil and gas, you name it. And so they are putting their money in alts or alternative investments, and they're not focusing their funds on just the traditional stock market. Now, again, they have stocks, they definitely invest in the market, but they're looking for other opportunities as well to be able to truly grow their portfolio. And I think that's super important if you're in a position where you can do that. And you don't have to have billions to do it, millions to do that. You need some money. I don't think I would tell anybody that has, five or $10,000 to start looking at alts. But if you've got, six figures, should you start looking? Um, yeah, I think you should. I think you need to start educating yourself. I think you need to start really focusing on how do I expand my portfolio to have a truly diversified portfolio. Look, if you in the stock market has been ripping. It's been doing amazing. There's no hiding that, and it could continue for a really long time. And if it does, you'll do pretty well. I think we're averaging like, is it 12% over the last decade, which is a really good annualized return. So 12%, man, that's great. Keep it up. But here's the problem is that could flip on its head at any point in time. And if you don't have anything to play defense on that, then you're just beholden to whatever the market decides. And when we look back in time, we can see there's several periods where that happened. And in fact, if you invest in the stocks, and by the way, this is most investments, not just stocks, but if you invest in stocks at the not at the bottom of the market, near the top, or even in middle to upper end of the market, you don't make very good returns on your money. You're actually, making less than a 10% return. I think it's somewhere around like a 5 or a 6% return. Where you make the money is when you're buying at the bottom. So when we think about the market's averaged 14%, that's from the bottom to where we're at today. That's not from the midpoint to where we're at today. uh, that number becomes lower. So, and then if you, of course, invested at the top and you ride the bottom down, that's a different story. We can actually look at that. We can go, if you invested in the at the peak of the market in 2000 before the dot-com crash. Now a lot of stuff happened. That was a big crash. Then you had the GFC that also threw the market down again. But if you look at that, there was a 14-year period where the S&P 500 actually made $0, $0. There was a decade from 2000 to 2010, it actually lost on average of 1% per year. So if you invested, at the peak of that market in 2000, it took 14 years for you to get your money back. And that's if you had a well diversified portfolio. Of course, if you didn't and you were invested in the wrong thing, you maybe lost all of your money. Who knows? Um, but it took 14 years on average for people to get their money back, and only then did they start to claw their way back up. And now again, they've done well after that period, but it took a while to get there. Um, so my point is to further diversify, and look at where else you can be. Look at ways you can further control your money. If you're not in control, look, you're just leaving it to somebody else, and you better have the right person in place that controls your own money, because I don't think anybody cares about your money as much as you care about your money. At least that should be the case. I found it interesting. I heard a statistic. I don't know how true this is. I didn't dig into the study or anything, but I found a statistic that said 60% of all people hire a financial advisor based on emotion, meaning a fear of they don't know what they're doing, and so they have to hire a financial advisor. Boy, that's a bad place to be. If you don't know what you're doing, learn what you're doing, still hire the financial advisor, but hire that person out of a place of strength, not of a place of weakness, right? I think that's super important. So look, I think the most important thing that you can get out of this is again, use your financial advisor, but if you don't have the right one, change that person. If you have the right one, awesome. Continue to lean on them, continue to use them, but you got to be in control yourself as well. So, look, you personally don't need to underwrite every aspect of the deal. You should underwrite and look at those deals. You don't need to, manage everything yourself, but you do need to understand the strategy. You need to review the decisions. You need to ask really good questions. You need to do your own research and learn about what's out there to be able to decide if it's right for you. And part of that is knowing your own goals, knowing, having intentionality behind it. If you do those things and again, you have the right advisor that's going to help guide you, um, you're going to do well if you are in control. So treat your personal balance sheet like the way a CEO would treat a business, right? With they're going to treat a business with clarity, with accountability, with intentionality. They're really going to be thoughtful about how they run their business, and you should be doing the same thing with your finances. So that's how the wealth get wealthier. Look, of course, it starts with income. You have to have money to invest, but once you have money to invest, you need to learn how to invest it the right way. All right. I hope this helps. You have a fantastic rest of the day. Make every day a Saturday.
Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out. And we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.